you need to go to uni and spend probably 15 years before you get to the stage you want to get to, and maybe, just maybe, you make it. But by then, technology might change enough and your job might be redundant anyway.
Welcome back to Marketing Made Iconic. Today's guest is someone who doesn't just play in the finance space, he's actively redefining it. Gee Taggar is the founder and director of Archer Wealth, a fast-scaling private credit company currently managing over $330 million in assets. After starting out as a banker and later a broker, Gee saw the cracks in the system, the pain brokers face, the unethical lending practices, and the limitations borrowers hit when the banks say no. So he built a better model. Archer Wealth isn't just growing rapidly, it's doing so with purpose, education, and a mission to put 100,000 Australians into homes. Today, Gee joins us to unpack his journey, how Archer Wealth is shaking up the lending game, and what it takes to grow a values-driven company in a high-stakes industry. Gee, you've built something impressive with Archer Wealth, but it started with a pretty big dream to launch your own bank. So let's rewind a little. Can you take us back to the beginning? How did your journey in working in your career go from there to actually founding Archer Wealth?
Alicia, thanks for having me, first of all. I hope to add value to your audience today. To answer your question, honestly, I came to Australia when I was 17. I think it was turning 18. I was working at a cafe, did that for a couple of years, and it was going great. After, I think I was 19, I just kind of, got sick of working in hospitality. And suddenly enough, my old boss helped me get a job at the bank. He actually looked enough for me. So at 19, I started working at CBA, and it was doing okay. I did that for a few years, and at around 25, I had a midlife crisis.
Oh, that's early.
I know. So it was crazy because I was doing really, really well. I managed to hit all my financial goals by the age of 21. So I was really feeling like I've accomplished something, and like every other 20-something-year-old, I partied a lot for 4 years, and I got that out of my system. And then after 25, I just looked around and I said, actually, I hate my life.
Oh.
So I was just looking around because I looked at my career at the bank and I realized I was going to be like every other person that was at the bank in their 40s with big mortgages, lots of properties that they have managed to get, but there was no fulfillment. And at 25, I remember just sitting down with my career coach at that time, and then I saw this episode of, this is going to sound funny, Suits, the TV show.
I love Suits. The best show ever.
Yeah, I know.
The best
show. I remember there was one episode where these lawyer guys were fighting with these investment bankers. And I know, man, investment bankers are cool. I want to be an investment banker. And then I went and spoke to my career counselor, and she goes, well, have you been to uni? I'm like, well, I dropped out. And she goes, okay, well, you need to go to uni and spend probably 15 years before you get to the stage you want to get to, and maybe, just maybe, you make it. But by then, technology might change enough and your job might be redundant anyway. And I'm like, well, thank you, that's very helpful. and then she goes, well, why don't you just start with something you're good at? Maybe you can start a business. And that's where I first got the idea of going into mortgage broking, which was the next obvious step you could do as a banker. I'd started the business Archer Mortgage Group. It did okay. In my first year, I got under 30 for Advisor Magazine. Was quite happy with that. Did that business. The business is still like running. There is a small book that, I haven't personally done much in that. It just sits there because I built it. It's literally 2 years of running that business, and I had this feeling where I was like, it's still not what I wanted, because what I wanted was to start a bank. And then I started this quest, you would call it, in Melbourne, where basically anyone and everyone I could get my hands on was like, I want to start a bank. How do I start a bank? It's been done before. It can be done again. How do I do it? And long story short, I have a very dear friend of mine called Ray in Melbourne. And Ray said to me one day, Gio, come on, I want to introduce you to someone. So he introduced me to this person who owns a very large non-bank in Melbourne. And he kind of just gave me a bit of a blueprint on how to go about it. And his whole thing was, done it this way. This could work. And I started going to this person for advice. And long story short, it took me from 2015 to 2019 of constant struggle to even just get to a point where we could launch. And then into 2021, we figured out how to run the business. And then 2021, I actually relaunched as Archibald. And then it took me another now 4 years to get to this point. It might sound like we've grown very quickly, but it's actually been 10 years in the making.
Yeah, wow. Was there a tipping point that made you shift from this traditional finance way of thinking to launching a non-bank lending business?
Yes. So as a broker, I was stuck with what the banks could do. If the bank said no, the answer is no, and there was no other way around it. I mean, there was non-banks at that time, but nothing like what a private lender / non-bank can do. So one of the reasons, I decided I wanted to work with private lenders at that time to help clients that banks didn't want to help. The issue was, at that time, this person, this is vividly, I tell this story to all my staff as to how I was like, before I started a bank, this is the best way to go about even getting into the game. I had a client, and this poor man in his 70s flew from Perth to Melbourne to see me because I promised him that I could do this deal from this private lender who said he will basically get this deal done, gave me a term sheet, looked really good. All we had to do was pay $15,000 up front. Unfortunately for me and unfortunately for this poor borrower, he paid $15,000 and within the day the money hit the account of this so-called lender, the terms changed. He just doubled the rate, tripled the establishment fee. He basically said it's not a no, but I now found more information that now makes this loan more expensive. But the way he did it was so sharky that I remember looking at it going, client will be an idiot to say yes to it. And unfortunately, this borrower had to say no to it and lose $50,000 so the guy wouldn't refund. Basically, he was a loan shark, or someone I would say is pretending to be a lender. And I remember looking at it that way, I'm like, this guy could have actually done a great job because this was a great deal. Unfortunately, I lost the client, obviously. And I remember looking at it going, there has to be a better way to do this business. And at that time, I'm like, if there's nothing else I'll do, I'll make sure at least I'll do private lending better. And that's where this was a tipping point, but for me to go, the banks don't want to help these clients. And there's so many sharks and cowboys in this industry. I think we can do it better. And that's been like catalyst. So whenever there's someone new in the office that joins, there's pre-written rules on how we want to deal with people, and this is one of them. Do the right thing by people and make sure that anytime someone works with us, they walk away better than when they met us.
It's so powerful when you actually experience a story like that, and
Yes.
it's like in your face. You can't forget it. And
So can I give you a side story?
Yeah.
Years later, and this is only like last year actually, I found out. I was talking to one of my friends who also is a private lender here in Sydney, and he was talking to me about this borrower, and I'm like, he was telling me the story about this borrower he was helping, and I'm like, the name sounds way too familiar. And it turns out this guy, this old man, went to my friend, and he actually got the funds he needed. So that was like a small sliver of hope for me. If I found out at that time, maybe I wouldn't have. I would have still done the Archer Wealth and pursued it. But I think it was just such a relief knowing that the guy actually got the help he needed at that time from.
yeah, what a beautiful full circle moment.
Yeah, I know.
You don't often get that, so that's lovely.
No.
You mentioned a few failed starts before you actually got traction. What were those early hurdles and how did you push through them?
I think it's been lots of failed starts. I've done lots of things. I know, exactly. So I'll just keep it relevant to this conversation. So essentially, mortgage group, which was my first business and broking business, there wasn't much to it. It was just literally you just work really, really hard to get clients, because mortgage broking is extremely tough business, and that's why I have a lot of respect for mortgage brokers. I personally couldn't do it long term because it was just hard work, and that's why I'm very, very respectful of brokers, because they are obviously a bread and butter, but I also know on the back end what they have to go through with clients to actually get the results they're after.
Yeah.
So that was a hard game. And I remember just for the first 6 months, and obviously coming from a really well-paying job in CBA, I wanted to make sure that the business at least breaks even. I remember sitting in my little living room in Blackburn, in a suburb in Melbourne. I was just literally working. Specifically, I would leave the house at like 3:30 in the morning, and I still wake up at 3:30 in the morning to go to the gym, and it was dark outside, and then I'll come home and I'll finish at around 10, 11 o'clock. It was just like 18-hour days straight, 7 days a week. I didn't take a break. And I remember the first 6 months were so crucial and so powerful. It was like going through, walking on coal. You're basically going through this painful process to make sure when you get to the other side, you're either going to make it or you're going to walk away going, yes, I gave it a really, really good shot. My whole thing was I didn't mind failing, and I still don't mind failing, but it has to be on the terms that I've done absolutely everything in my control to be able to make sure I gave it a good shot. So I can look back and go, actually, I couldn't have done anything different. So that 6 months this is why I got Advisor Magazine 30 under 30, because I kind of smashed it. I remember to commemorate at that time, I'm like, I want to remember this period as the most painful and the most, I would say, strength. It was a really, really strong period in my life at that time, because I was like, okay, cool. It's horrible, but I want to go through it, and I'll remember it forever. I remember getting the logo of my company tattooed on my sleeve just to remind myself that is possible. What else is there's nothing I can't do, because I managed to get through the first 6 months. That was the first big hurdle that I jumped through. The most recent one would be when we couldn't get funding. Like I said, I tried starting the business in 2015, straight when I started broking, and I was just trying non-stop to do it. For 4 years, nothing happened. Just talking to people, nothing happened. And I remember in 2019, I got really upset. So I kind of just sold everything I had.
You would?
Yes. Sold everything I had and everything else. I had some properties, and just managed to get enough funds to start lending my own money out. And that was probably the second hurdle of just saying, no one else believes in you, believe in yourself, put your name on the line and just go for it. That was scary, but I was single and I didn't have any responsibility, so it was plausible, so I did it.
Yeah.
And remember, straight after, I think I told you before in the last meeting, it'll probably tie into something else, some of the other questions you might ask me in the next section, but is basically my friend's dad called me and he goes, so I heard from my friend that you are lending money. I'm like, yeah, so how much have you lost? Well, I was like, well, 500,000. And he goes, how much did you have? I'm like, just about that. And he goes, why did you lose it? I'm like, well, I didn't technically lose it. I lent money on a car, on an Aston Martin. It was a really cool car. And lent money on a yacht. And I lost both the car and the yacht, and the guy defaulted. I remember just getting so stressed and going to Adelaide to find these people and spending a week trying to get the money back. And in the end, we repossessed the car, found the yacht, sold the car, got the money back, and the yacht they refinanced out and paid us back. And I remember sitting down at that time thinking, what can I learn from this to make sure it doesn't happen again? And the lesson was, don't lend money on things that move. So that was a very, very stressful period. And that when you start to learn basic principles, and then you have this thing where I've been through a separation with a business partner, and he knew all the back end, I only knew the front end. Then all of a sudden you have to learn the back end and the front end, because I was by myself. I remember calling my friends at CBA, all my credit officer friends, and asking them to help me write credit policies, understand the 5 C's of credit, going through every single thing you need to learn as a credit person to make sure you don't lose money. Because obviously then I was starting to play with other people's money. My friend's dad, for example, he was one of the first people who invested with us, and he was around 5 mil at the time from his super fund. My other friend's dad, who was an accountant, basically found out about it, and then he came on board, and he was a second investor, but as a group, they invested around 32 mil, which was a few of their investors basically gathered together, and they kind of gave us money. And that was the first start, and all of a sudden, we ended up with around 52 mil in 2021. So that was when we launched Archer Wealth. Then, Alicia, it sounds like a big number, but honestly, in our lending game, to give you perspective, anything under $1 billion, you're not really considered a full-on lender. So for me, the 52 mil was a great start, and it was like, okay, cool. How do we now push forward? The next chapter was to try and get more funding through international bank, which I remember one of my friends from Hong Kong is an investment banker. He introduced me to a family in Malaysia. We went and saw them, and we had a bit of a conversation with them, and then we ended up raising almost 100 mil from them. All of a sudden I had 152 mil, and it was insane because there was only 3 people.
Yeah.
And then it's just been one thing after another of us just raising money from a very selected few people and companies who have managed to just give us so much leverage, because I'm not out there raising money for a living, which a lot of lenders get stuck in. If you have the resources, great. We didn't. So my whole thing was, I'm not a fund manager. I'm not here to raise money. That's not my main business. I'm a lender. I'm here to lend. So a lot of the focus has been so far, how do we build the business to actually lend money and do it well? Because it then ties in with my purpose, which is, still to start a bank and put 100,000 people into houses.
Yeah, man. And I know you mentioned you only have 6 investors, and the listeners, just to take them through the journey, you built from 2 million to 52 million to 133 million, which is all quite remarkable growth. And now obviously we're talking plus of 330 mil, which is still in your terms, you're not quite there yet because you're under the billion mark. But talk to me about how you're so intentional with your strategy in selecting the investors or accepting investment.
Richard, can I be honest with you?
Please.
It's not
we've been all
intentional at all. It's not intentional at all. I can't sit there and pretend that, I handpicked this. Not at all. One thing I was set on was this. I have said no to so many less than $1 million investments because it took me, I've realized in the beginning, like I said, my focus was to lend money, not to raise money as much. So what I realized in the beginning was it took me the same amount of effort to close a $50 million investment that it took me to close a $500,000 investment. And I was just a one-man band doing this. So I figured it's actually not the highest and best use of my time and resources. So we just went for the big fish. But the first few investors we were quite lucky because friends' parents. And then after that, it's just been, okay, cool. So we did a deal with another institutional fund and funder, and they were great. And now we've done a few deals with some large family offices. So 6 investors include investor groups. Under each group, they may have like 2,000 investors who couldn't care less. I just deal with the one source of funding. That's where we're getting a lot of funding from out of these 6 investors.
Yeah.
But I guess you could call it intentional, but I was just going for the least resistance mode, which is go for the guys who I know are good. We have performance to show for it. All they need to be parameters on which they want you to operate. You can fit the deals in their parameters. But what makes us different, and I say this with a lot of pride, is that we've been able to basically find people who trust us enough to actually work with us. And when I say that, I'll give you a great example. We may have one of our investors who want to, for example, just do 60% on a house somewhere in Sydney, for example. But we can go up to 75% LVR on a house. And the 15% will be either one of our internal investors who will come in just to top up, or will be actually another lenders that want to work with us. So they will come in right underneath us under our own umbrella, which just gives us the leverage, because that just means we can be super flexible. We're not stuck with investor and their appetite. We can actually do things banks can't do, because otherwise, if I was to just work in those boxes, we would be just like everyone else. There's a reason why a lot of bigger lenders, and I actually have heard this from some of their staff members, look at us as a threat because we're fast. I got guys who sleep here in the office. I spend a lot of time in the office. So there's a lot of hunger in this business, and there's a lot of guys that see the vision, because it is not about the money. If it was about the money, we'll be doing different. We'll be doing this business very, very differently. But these guys here understand that there's a higher purpose and a mission to what we're trying to do, and we actually want to help people. And there's a reason why we have been able to grow so quickly. I think our revenue tripled in the last 12 months. And before that, it's since 2021, I feel like we're doubling every year at the moment. But last year was incredibly good for us. And there's a reason for that.
Yeah. And so speaking of which, what does scale look like for you? And what do you think, what lessons have you learned that other founders can learn from your trajectory?
Yeah. Scale for me personally in my game is, there's levels to this, to be fair. So I can't just say billion is the start, Alicia.
Yeah.
In our business, all the guys I actually look up to, they tap out at 20 billion in loan book. Our goal is, that's a scale. So when you get to that level, that's when you actually are competing with the likes of actual St. George's and not so much Latrobe, but like second tier banks that are owned by the big banks. That's scale. Yeah. And the lessons I've learned so far, going from 500 to 1,000 to 2 million to now 332 million, to where I'm just going, I think I said to you, we're going for another funding round at the moment for 133 million. The lessons I'm learning is everything in life there's steps to it. Whenever you try and skip steps because you're trying to get to somewhere quicker, God has a way of putting you back. You have to go back and learn few things again, and sometimes you're repeating the same mistakes. And the goal is not to try and, lend $1 billion in the next 2 years or in the next 6 months, for example. The goal is to do that in the next 10 years, 20 years, 30 years. So when you start to look at things and just extrapolating what is possible, you start to make decisions differently. You stop cutting corners. It becomes a long game. And that for me was powerful, because I was thinking about this today. I love Tony Robbins, for example. And I remember he says this thing where he's like, people underestimate what they can do in 10 years and overestimate what they can do in 1 year. And it's true. Yeah. I usually have these 1 year goals that are huge. And sometimes I go towards the end of the year, I'm like, man, I didn't do shit. Compared to what I wanted, I didn't do it. Yeah. And then I go back and actually, 10 years ago, I was starting my very first business. And here we are today.
Yeah.
So if that's the trajectory, what's possible in the next 10 years? And the 10 years after that? So you start to look at it, and when you look at it that way, you make better decisions and you plan better. And doesn't mean you take your time to do things. Like, I'm in a rush. But I don't make decisions to get the results tomorrow. I have to think longevity. What will happen with this decision's impact in the next 5 years, 10 years, 20 years? And you make, and every business decision comes from, okay, is this the highest and best use of your time and resources? Is it going to get you the results you're after? And then there's this mental models you can use. Like, let's give you a quick one. It's called OOCEMR, which is a model I use to answer questions. Big
Yeah.
questions, small questions, which is what is the outcome that I'm after? That's the first O. What are the options that I have in that specific sequence? Okay. And then what are the consequences of those options? And then how do I evaluate these options? And then how do I mitigate the risks that are associated with these options? And then resolve. Make a decision and just get on with it. Don't procrastinate.
Yeah. That's great.
Yeah.
Let's clarify something for a moment. Private credit is booming, but as you've said, a lot of people confuse it with private lending, and that
Correct.
understanding can be dangerous. Can you break down the difference between private lending and private credit for the audience?
Yes. So private lending, just so you know, is private credit. Or private credit is not private lending. So the main difference I would say is private credit is a booming industry, but people misunderstand what private credit is versus private lending. Private credit is anything that is not done by the banks, basically. It's still institutional money coming in. For example, a company, an ASX listed company can go and borrow money against its balance sheet, and that's private credit. Private lenders, generally speaking, 95% of us only do structured real estate debt. Always there's a property as a security, and we're just basically doing loans that basically you're acting as a bank. You're doing a first mortgage loan where you're on the title as a first mortgagee or a second mortgage loan. No one should be doing coded loans. If they are, they should have an ACL. So the main thing with private lending is that you've got to make sure the purpose of the funds is business use or investment, and the borrowing entity is always a company or a trust. So like majority of the lenders in Australia, there's private lenders or non-banks are doing the exact same thing. And then there is a vast majority outside these, which is private credit, where you'll see an inflow of a lot of institutional funds, a lot of superannuation funds. A lot of banks actually do it, but because of restrictions in the banking system, they have to invest money in a company that does private credit, and through that they can lend money to their warehouse structured products. So the difference is normal investors, normal developers, they're not gonna ever need private credit unless they're doing some crazy stuff with their businesses that they're scaling. Most of us will end up using private lending because the banks don't want to help them.
Yeah, cool. And why is the Australian lending landscape behind markets like the US, and what needs to change?
Without bashing the big banks, it's actually the fact that majority of the lending in Australia is a monopoly with the big banks. So it's controlled by the big banks.
Yeah.
And it's through no fault of their own. It's just the way the system is designed. In US, for example, I think almost 50% of the lending is done through private credit. Whereas in Australia, I think it's 90% is still done through the banks, or around that mark, including their subsidiaries, and then the 10% is private credit. So it's a booming industry compared to the markets are a lot more matured in US and versus Australia, which is still an emerging market in terms of private credit. And so I go to a lot of investor events, and you see the level of sophistication that exists in US does not exist in Australia because we're still just starting out. I think the numbers are there's 133 billion or something. I forgot the number. That's in Australia versus US is in trillions, for example.
Wow.
And they're expecting it to double in Australia in the next 5 or 10 years, but it's not even close.
Wow. And what are the risks where borrowers and brokers should be aware of when engaging in this space?
Yes. Great question, Alicia. I write a lot about this topic and Broker Daily, and I can only tell you what I personally see and my team sees every single day.
Yeah.
You have a lot of, when I say you have 400 lenders in the market, at least they're not real lenders. There's almost 200 of them don't even have the funds. They're just brokers pretending to be lenders, but the problem is actual brokers don't see it. So they might come to someone like me, and to be fair, we have relationships with some of these brokers where obviously we've handpicked them where they will white label us. And I'm completely okay with that because they give us enough business that we can afford to do this. So, but then there's some, like I said, that guy where when we first started, he just gave me a rubbish term sheet, which was pretending to be a lender, and he charged my client upfront fees. And there's a lot of that happens that you've got to be careful with. So, first thing, is the lender you're dealing with actually legit? Are they real, or are they brokers pretending to be lenders, and your client is actually going to get shafted in the end because they're just not doing the right thing? Number two, does the lender actually have the money? Because sometimes these lenders will push out term sheets which are not real because they don't actually have the funds. So they'll take the client through the full process, and at the end they'll find a reason to say no because they want to charge fees. So again, very sharky cowboy behavior. So the things I look out for personally is I look at their Google reviews to see what kind of reviews they have of me. Then I look at their credibility with the other brokers. I used to call brokers and be like, hey, have you heard of this lender? What do you think? Have you had any dealings with them? And then I would basically check for what the term sheet says, because when something is too good to be true, it usually is. For example, I saw this term sheet where the client was getting 1% establishment fee. Normally it's between 1.65 to 2%. 7.98% interest rate, which was impossible. It's cheaper than some of the banks. 80% LVR, which is again, that's not a thing in private lending. The maximum you'll get is 70% or maybe 75 sometimes. Like everything that's just a red flag. And you're looking at the terms that are too good to be true, and they're promising money in 24 hours. I mean, I know one or two companies that do it, but they charge you 3% a month or 2.5% a month. And you see those rates and that speed, you know it's not true. And usually, I see these, without saying I told you so to the broker, I kind of tell them you got to be careful, because at the end of the day, it's the broker's reputation that's on the line when they're pushing these term sheets out to their clients. And beyond all that, there's a client at the end of this who's in trouble that you're trying to help, but you're actually putting them in a worse off situation without even knowing. So, there's few things you've got to be careful with when you are dealing with private lenders. Make sure they're legit. Make sure you've done some dealings with them, or at least some of your colleagues have done any dealings with them. Make sure the terms are real. Make sure they actually have the money.
Yeah. It's logical.
Yeah. The basic checks.
Yeah. And I love what you shared before, that there's a real purpose behind Archer Wealth. I think it's pretty rare in this space, but I like the deep mission that sits behind that. So tell us, what's your guiding philosophy when it comes to balancing the investor returns with borrower well-being, if I can put it that way?
Yeah. This was something I got when we first started Archer Wealth, which was anyone that deals with us has to walk away better off than when they came to us, which is borrowers, investors, brokers, our own staff, the business itself. And the reason for that is it's really easy to get caught up in, I'm going to try to get the maximum return for my investors, or I'm going to try and make the most amount of money for myself, or I'm going to try and make sure my staff gets rich, or the broker gets rich. It's I guess the greed can take over very quickly. And the issue then becomes, how do you manage that with the person who is the very end, which is the ultimate borrower? Now, none of this matters if the borrower is actually not getting a benefit out of it. So again, going back to the principle of why I actually started this business was to help people. Help people means everyone, not just the investor, not just the borrower, not just the investor, not just the borrower, not just the broker, not myself. It's got to be everyone. There is this, I'll tell you why we started Archer Wealth. I don't think I went into that too much, because the reason why the whole 100,000 number came up, by the way, was, so I came to Australia when I was 17. I didn't speak much English. I learned it now, I guess. At that time, unfortunately, I was too young and got into a bit of a stupid fight with my dad and ended up homeless for a little bit because I didn't want to ask money from my dad. That was on purpose, to be fair. And before that, growing up, I also didn't have, my parents didn't have much money. So they would just like, we lived in our relatives' houses. We never had a home. And there was this thing in my head, and like, I would love to put more people into houses because I didn't have one. And then just coming to Australia and just sitting on a park bench in Richmond just kind of fortified it even more. And I'm like, how can I do this? There was two ways I could put more people into houses. Become a developer. I'm not quite have to be a developer. I'm not going to lie. And the other one was to just start a bank. I'm like, okay, I could start a bank. It's been done before. So, or at least a bank-like institution where people can actually get a benefit out of. And that is the core memory I have as to whenever the things get really, really hard at work, I have to remind myself that's the reason why we started. And when sometimes at work we'll have a huge argument about a deal because someone's pushing it too hard, but you know it's not the right thing to do by the client, I remind my staff, I remind my guys, hey, it's not what we started. It's not the right thing to do. I know everyone can make money out of this, but if it's not the right thing to do, just don't do it. Just walk away. You're actually better off helping them in a different way. And sometimes saying no is more important than saying yes.
Gee, you're on the ground floor of this industry daily, working with brokers, seeing what's broken and what's booming. So let's talk about what trends you're seeing in the lending space right now and what people really need to know about.
So, Risha, one of the main trends we are seeing is obviously this rapid growth of private credit / private lending, because there's so much influx of money coming in through institutional interest, super funds interest, and really the banks as well, just driving it. Like I said, the industry is set to double in the next 5 to 10 years. The other thing is, shift from traditional banks, which basically there's deals that the banks were doing, which they stopped doing, and then the private credit just took over. I mean, personally, I can tell you the amount of developers that we deal with now, and they were bankable clients before the rates started to go up. Now, same clients the banks can't help because rates have gone up so much in the last 2-3 years that they have to look elsewhere because if this is their livelihood, so they need to still continue to develop. So we end up just getting those creme de la creme clients, which we didn't even have access to in the past. So that's been great for our growth and for the industry as a whole. The other one is, like I said, in institutional interest, which, funnily enough, these are the same institutions that were funding these deals through the banks, and banks were then using their structured products to finance these guys. Now they've just pulled out of the banks and they're coming direct to us. And same goes with the banks because they still need to deploy those funds. So they actually do what's called a structured warehouse products, which we will get, for example, and then the banks are still lending the money out just in a different vehicle, which is what I said to you before. It's like almost 90% of the lending in Australia is controlled by the big banks.
Yeah.
Because either way, you're getting money from the banks one way or another. The last one is obviously there's a massive push for ESG in the past, but then they had a whole issue with greenwashing, which I'm not sure if you heard of. It's just basically people were using ESG as a way to just greenwash and get credits from the government, which has now come to a stop, or at least it's almost coming to a stop. But that was a big push, and that was a trend, and that's kind of slowed down a bit. But the main one would be just the growth will continue, the institutional interest will continue, and the switch from traditional banks to private credit will continue over the next, 5 to 10 years at least.
And with 400 plus lenders in the market, how should brokers and borrowers choose the right partner?
It goes back to the story about what I said before about, you got to look for red flags in your lender to see or I personally, for example, had a checklist that I would follow when I was dealing with a lender to see if they're legit, see if they have the track record. Sometimes it's not even that. Sometimes have they actually done deals like this before? Because sometimes there's lenders who, through their funding lines, cannot do certain types of transactions. And when they say yes to that, it's not their credit that's saying yes to it is their sales guys at the front end who are saying yes to it just to bring the deal in, get their quotas, and then if it gets declined by the credit, it's obviously not the best way to do business, but sometimes they just have minimum quotas to go to bring business in. So transparency is number one. You're gonna make sure what the lender is saying they're gonna do, they will do, and they're being transparent in the process. The pricing obviously is a great one to make sure that you're getting your clients competitive deal. Google reviews, just doing normal research on them to make sure they are a legitimate lender. They track record, how many deals they've done, what kind of deals they've done. The management team, is there any red flags about the people that are running the business? Because sometimes you will have these. I always love this. Whenever there's a fake lender, they usually don't have an about us page with anyone's. There's no about us page, or there's about us page with a generic text. There's no faces. There's no one's photos. So that's a big telltale for me, because I can kind of tell if you're not comfortable putting your face out there, how can I trust you? And it's so easy to see. It's just like really, really basic stuff, Alicia. Just check the person's name, check their website, check that they're legit, check their Google reviews, check that they can actually, this is within their appetite before you commit to paying anything. Because anytime you pay something up front, if it's a large fee, usually it's not, if the lender hasn't done it before and your colleagues don't know about them, it's probably not the right lender for you. Just basic checks.
All right, let's bring this to life. I know you would have heaps of case studies and great stories to tell. So what is one case or story, meaningful story, that really stands out to you that you could share?
Sure. I have so many, but there's one that I think about a lot. I mean, one of the bad ones would be the guy who unfortunately lost $15,000 when I was starting out because of my ignorance. But then the most positive one was also not that far off from that time period, where this guy was in trouble. Like, he started a business, he just wasn't getting a hang of it. He moved from working for someone else to starting his own business, and he was about to get liquidated because the liquidators was just on him. The business was about to go bust. It was no way, because I remember him coming to me at the time going, "Can you help?" And I just couldn't work out how to help him. And then I remember, because I just couldn't get enough funds from the investors, I remember just thinking to myself, actually, I really want to help this guy. And I put some of my own money into the deal and basically convinced my investors to go for it. And at that time, we only had like 2 investors, and one of them said yes. And he only said yes because I wanted to put my own money into the deal, because I believed that this guy was actually worth helping. And lo and behold, we got him out of trouble. And then I said to him, let's just call him John. I'm like, "John, I'd love to help you grow this business. What can we do to help?" So he needed more funds to actually not just get out of trouble, but grow the business. And we lent money against his house that he lived in. And from that point onwards, he just kept growing. And the business he got back on his feet. The business continued to grow. And he started doing more developments. And in the end, within 3 years, we ended up with the guy about to go bankrupt to 7 properties within 3 years. And I look back, and he's become a dear friend. So every time I go to Melbourne, we just hang out, because he's one of the first guys I was like really passionate about helping him. And I just loved the fact that he's a perfect example of why I started Archer Wealth. Because I go back to him, I'm like, John was great to deal with. John was in trouble. We helped John. It felt good. It changed his life. And he says that, you changed my life. And, it's just getting those kind of feedback loops. It's just so many stories like that. But this one's the one because it's so old, and he's now a dear friend. So it's just, I go back to it a lot.
That's lovely. And it's a great segue into talking about your mission and drive. And I want to say you're not just building a business, you're building a movement. Changing lives.
Thank you. We tried.
I mean, you've mentioned a few times you want to help 100,000 people get into homes. And I think you explained before what that number really means to you.
Yeah.
Where is Archer Wealth heading next?
So we have short-term plans, Alicia. We have long-term plans. You know the end goal. But the short-term for us is, so we just finished. We literally finished last week. I think we lent $406 million, which was a huge milestone for us to break that 400 million barrier. The next one is to try and, when I say try, I mean being humble. We're going to lend at least 700 million in the next 12 months, and that's the goal, and we're going for it, and we know we can do this. So the goal will be by the end of next year, we can hit a billion mark, and that's where we're just like, okay, cool. Once you hit that mark, you become a real business. Well, right now we're a lean startup, and some people look at us and go, "You guys are doing really well." Yes, we are, but at the same time, I got the cap of 20 billion that we're trying to hit, and again, I have 30 years to hit it. I'd like to do it in 10.
That would be nice.
Correct. So it's literally just that, because once you do that, you can basically compete with the likes of, Bankwest, St. George, all the second tier banks that are owned by the big banks. And in the process, you hit the 100,000 target. We will hit that by then for sure.
Yeah. And to wrap us up, what gets you out of bed in the morning?
Alarm.
That's the short answer. What's the long answer?
It's crazy because there's this fire inside you where you just I go to bed really excited to wake up and start work again.
Yeah.
I usually can't sleep more than 6 hours. So I usually will go to bed around 8:30, 9. I'm up at between 3 and 3:30 in the morning. I kind of just go to the gym, start work, and just kind of get on with it. And it's literally but they say when you have to push yourself to do something, you're probably not on the right path. When you're being pulled towards something, that's when you know it's the right path for you. And I've been very, very fortunate that I found something that is pulled me towards it for the last better part of 10 years. So it really just isn't something I think about, oh, I have to do this. I instead, it's like I get to do this. So it's literally a lifelong purpose. And the thing is, Alicia, I may not ever make it. And I'm completely okay with spending the rest of my life working towards my purpose and hopefully make it. And even if I don't, I know there will be life well lived.
I think we've heard a lot of resilience, purpose, mission, and lots of inspiring stuff from today. So I want to thank you for sharing such powerful
You're welcome.
insights with us. From private credit education to purpose-led scale, it's clear Archer Wealth is making serious moves and doing it with real heart. For listeners who want to connect, learn more, even work with you, where's the best place to find Archer Wealth?
My face is everywhere when you look at my name. So you
Just
can
Google Archer Wealth.
You can contact me. Exactly. You can just contact me directly on g@archer-wealth.com, and it'll come back to me 3 times a day when my email is checked. And then, or you can just call me if you like, 0430 276 874.
Thanks, G. If this episode opened your eyes to what's really happening behind the scenes in finance and lending, please share it and let more people find the right partners, make smarter decisions, and build a better financial future. Until next time, thanks for listening to Marketing Made Iconic.
Thank you.